Amy.
Welcome.
So it looks like we have at least one other lover of San Antonio who is in our
Ah,
chat as well.
Mimi.
Mimi, I had
If
no idea.
anybody wants to visit, I will take you around and take you to the best Mexican food restaurants.
Oh, that's my love. My
Yeah,
love is that's my food that I can always eat no matter what.
same.
I can always eat way more than I should of it.
Oh, me too.
It's the one food that is that way for me. Hey, welcome everyone. Thanks for joining us today. We are going to give it just a minute here because we still have a few people popping in, and then we'll get going. Thanks for joining the latest in mortgage today. So yeah, oh, it's yeah, Mimi's Mimi's wanting the Mexican food too, it looks like with us
Come
to
on, Mimi.
Mimi, you're close. You'll have to make it down there and take her up on the food that she's offering. So yeah. Well, I think we'll go ahead and get started here. Welcome everyone. This is the latest in mortgage today. I am Faith Howard Mooney, SVP of Member Engagement here at the Mortgage Collaborative, and love doing this little show with you all on Fridays, a couple of Fridays a month. So feel free to pop into the chat with us. We always love it when you do. We were just talking about San Antonio and Mexican, authentic Mexican food that we are all now hungry for. So yeah, so pop into the chat if you've been to San Antonio and there's a favorite place that you have or something like that. We would love to know because now we're all going to go and visit Joy there. So this is the latest in mortgage today. And in each episode, what we do is a TMC lender member joins us to help us unpack what's new in mortgage, what's working, what's shifting, and kind of what that means for all of us within our network. Our goal is always to have a space where people can show up, speak out, make meaningful contributions to our network and to the industry at large. So that's why we would love it if, as we're talking here, you pop your thoughts or your ideas into the chat with us. Joining me today. We are very grateful. We had a slight change of plans late last night. So, shout out to Ashley Alexander, who knows her lender members well, and got a hold of Joy LeFlore, who is the Director of Operations at Jefferson Bank. And she very graciously hopped on here at very short notice to help us do the show today. So, Joy, thank you so much for joining us.
Thank
We're
you for
going to owe you a
having me.
beverage. Or
Thank you.
something. I don't know
Yeah,
what, something of your
yeah.
choice. Ash and I are both going to owe you. So, Joy, I would love it if you would do an intro of Jefferson Bank and your business model so that people kind of understand, your point of view and where you're coming from.
Sure. We are a family-owned community bank. So we're on our fourth generation that's on the board. So the third generation is the chairman of our board, and then their sons are on our board as well. So we're a almost $3 billion bank.
Okay.
We're having our 80th anniversary this
Oh,
year.
wow.
Yeah, yeah. Um, so when I started at the bank, we had less than 500,000 in deposits, and it was a fun time. It was pre-compliance, pre-Frank Dodd, and then under 500,000, it was even less compliance. We had the best time. So yeah, we have people that have been here for a long, long time.
Yeah.
So
Yeah,
I've
so
been here
let's talk about that a little bit. Jefferson Bank joined us in, you were right, July of 2018. So
in
you,
Austin. Austin was our first conference.
yes, okay.
Yeah.
Oh my gosh, I was still on the partner side of the business then. So I think you joined right before I joined TMC. But yeah, so July of 2018. A lot has changed in mortgage. We've been through some craziness here since then. We today, this morning, we're talking about culture prior to that. And TMC is someone that has longevity on our team. I mean, Ashley I think, is our team member now who has been here the longest, but our team has been here for a while. We absolutely all love each other and love being here. You also have tenure on your team that is just really kind of unheard of in the mortgage space. And I would love for you to just kind of talk about that a little bit. Culture is
Yeah.
such a big topic in the industry right now and how you retain your employees.
Yeah. Well, I think that it helps that we're family owned. So it does feel like a family. Our mortgage department truly feels like a family. So the head of our closing department has been here 32 years. Um, the longest running LO on our team has been here 30 years. The average tenure probably for the LOs is about 10 to 15 years. Our newest one has been here 3 years. Processing is the same. We have people that have either been processing for us for 12 years or were at the bank for 10 years before they moved over. We like to hire from within too, if we can.
Yeah.
So it's, you know, like any family, you can get into little spats here and there, but for the most part, like we truly love each other.
Yeah. Yeah, very similar to our culture here and what we want to try to create here. By the way, you have a fan in the audience today, Mark Renault.
Mark,
Um,
I'm a fan of Mark too.
yeah, we are too. We are too. So yeah, so he popped into the chat with that. Why do you think that, I mean, what do you think the biggest reasons are culturally that people have stayed? Is it that family feel and their commitment to the company, or is it other things that you are doing as a business? Or
Well,
both?
I think it's how we treat our people, which, you know, from the top down, but specifically in our mortgage department, it's the way that, you know, I lead, the way Mike Weisty, who just retired, he
Yeah,
led. Like I really study a lot about leadership, and I try to be a leader, not a boss,
yeah, yeah,
right? And I want to help people grow into what they want to grow into. And I think when people feel appreciated,
yeah,
you know, they reciprocate.
yeah. I agree with that. I think that if people are happy, you get a lot more out of them.
Mm-hmm.
If you allow them to do their work in a way that makes sense to them, as long as stuff is getting done. I agree with that type of a management style for sure. You shared with me earlier your mission statement, and I think it really does speak to who you are. And so I would love it. Are you willing to share that with everybody?
I will. So we came up with a mission statement, and I took, I had everybody pitch in so that it would be
Yeah,
everybody's
from
mission
the
statement,
whole.
not just
Yeah,
mine, right? So
yeah.
I had everybody send me phrases, and then we put it together and we read this. We have a team meeting once a month where we're all here. And I have someone read this mission statement at the beginning of every meeting.
Oh,
And
nice.
yeah, and it just helps remind you.
It's a
Um,
reinforcement for sure.
right,
Yeah.
right. So our mission statement is that we commit to a culture where every voice is valued, collaboration comes first, we stand together against challenges, we honor one another with kindness, trust, and shared humanity, knowing that our greatest strength comes from the way we show up for each other.
Yeah, I think that's lovely. That is a
Yeah,
great way. And obviously, that one of the reasons why you continue to have longevity. Not surprised by the longevity of your team. I think that's a little bit more common on the banking side, but to have LOs that do not move around is
yeah,
amazing,
it is amazing.
even on the banking side of things. And I would
Yeah.
imagine makes your ops process much easier because you get
Mhm.
accustomed to each other and things flow really smoothly.
Yeah.
So let's move into talking about some stuff operationally. So rates have remained kind of stubbornly in a range. And with everything going on right now, I don't know if that will hold or not, but obviously purchase levels are still down. And that squeezes margins, especially with other costs always going up. So the environment really right now, I feel like demands that your operation runs efficiently, and you're doing all of those things to make things run smoothly, with less time. So I would love to hear from you, like, how you kind of adapted through this period. So how did you adapt to stay profitable in a lower volume market that has continued for a much longer time? than anyone, I think, anticipated that it would.
Well, in all honesty, 2024, our department was not profitable.
These
And
was.
right. And we had layoffs. We've never laid anybody off ever in the 80 years of the bank. So for us to do that in our department was it
Huge.
was
Yeah.
the hardest day of my life.
Yeah.
I'll put it that way. It was because these were my friends too.
Of
Um,
course.
yeah, it
Yeah.
was really
And your
hard.
family.
Right. So what we concentrated on in 24 and some of 25, mainly 24, people didn't want to move. They were in their 2% interest rate. They did not want to move. So we concentrated a lot on second lien home improvement loans, second lien home equity loans, so that those people could stay in place, but they wanted to do improvements. They wanted to add a pool. They wanted to add more space. So that's kind of how we made it through that year. I
Yep.
will say, we're so busy right now.
Which is
San
great.
Antonio is a great market. We're very lucky to be in Texas. Um, we're so busy. So we see people are they're just even though they had that low interest rate, they're ready to move. Life happens. You have a kid, someone passes away, you need to downsize.
Yeah.
So I'm seeing that happening a lot more. I'm seeing investors getting back in the market and buying investment properties.
Yeah.
So, we're doing a lot of non-QM, the DSCR, the bank statement loans. We just rolled out a doctor program in December, and it's not our money. It's one of our investors.
Gotcha.
Um, so that has helped a lot. Yeah,
Yeah.
San
Yeah.
Antonio is pretty strong.
So you have adapted, not necessarily as much process wise, but more product wise to capture more business from the market that you are in.
Yeah.
Yeah. Have you seen that? I know that we've talked about this on a couple of other calls on the non-QM side of things. I think number one, non-QM is I think at first when it came out, it's like everybody was thinking it was that B and C paper type of situation
Right.
that we had
Right.
going on long ago,
Right.
right?
Right.
And it's really not, that's not what it is. It's like so many people have lives that are so different or income sources that are so different that you kind of land in that non-QM space. Have you seen your investors more focused on that and diving into that more as well? I know there was a period where everybody kind of exited. So what have you seen?
Yeah, I have. When it first came out, there were only one or two investors that were offering it. And now it seems like everybody's getting into the market. And we did not do subprime loans,
Okay.
but I think that and I could be totally misspeaking, but I feel like when subprime loans first came out, it came out with good intentions, kind of
Oh,
like
I believe
this
that
is,
too.
right?
Yeah.
And then it morphed into, oh my God, this is such a moneymaker. Let's like expand it and expand it and expand it.
Yeah.
So I think the non-QM products right now are great. We just need to make
Same.
sure they stay that way and don't
Yeah.
become the new subprime.
Yeah. Yeah, I think that is a great way to put that. I think a lot of that with what happened in 2007, 2008, I think the focus has just been different. I also think that during that period of time, which it was a long time ago now, so some people on this call maybe weren't even in mortgage during that period of time, but I feel like it kind of weeded out some of the players that were in the industry that maybe had different intentions than the really good people that we know that are
Right,
in the industry
right.
trying to do all of the right things. So I hope that that
Yeah.
also continues to
Well,
be.
and the non-QM products today, you have to have good credit scores. It
We do.
wasn't like the subprime where you didn't have to pay anything on time in your life ever, and you could get 100% loan to value with stated income. So,
Yeah.
yeah,
Yeah,
this is a very different
I
product.
agree. Yeah. Oh, and Mark Renault, he's
Compliment.
hopped in. LO
Hmm.
compliments really helped that as well.
For
Agree.
sure.
Yeah. Yeah. Definitely made a difference. So what's going on kind of out in the world right now is AI has brought a lot of new products, I guess I would say, and things into the industry. And I think anybody that works, with both IMBs and banks, there's a difference there in how some of those things are are implemented, banks usually are further down the pipeline from IMBs and for a wide variety of reasons. And we talked a little bit earlier about there are really benefits of being in both. Everybody's a little bit jealous of somebody, it's on the IMB or a bank because of things that they can do that maybe you can't, but then you've got something else in your hat that on, the different hat that you can wear. So I think it's a much slower process in evaluating and vendor management and those types of things on a banking side. Can you share just a little bit, kind of as a bank, what you're looking to do related to, upcoming AI usage or platforms that will assist you in your business?
So that is my goal for this year. I'm exploring different options. And shout out to TMC because of the collab labs, like being able to talk to my collab labs who I love those guys so much. And finding out what they're using, what their thoughts are, plus other people in the network that I don't even know that Ashley has hooked me up with or Sarah's hooked me up with to ask questions. So that has helped a lot because I'm not on my own trying to figure this out. So, yeah, I've been doing a lot of research. When we finally decide what we're going to do, we have to go through our third party risk department at the bank, vendor
Okay.
management. That's an FDIC requirement. And I don't know about other banks, but at this bank, nothing moves fast. Like, there's no, we're going to roll this out tomorrow. This is like, well, we're going to take at least 30 days to look at this and
Yep.
project management and et cetera, et cetera. So,
And you got comments in the chat that you are not alone.
yeah,
I think
yeah,
that is, we see that here. Our team sees
uh-huh.
that here too, that it just takes a little bit longer. It's a longer vetting process. I'm really happy though that we could help you. Shout out to the
Yes,
team for helping you with that
yeah,
vetting process and everybody that was in your lab group. Collab labs here are something that our lenders, I believe, really love and get a lot of value at. You mentioned something that I'd like to talk about with you for a little bit. So banks, we were initially when we got together, we were talking about CFPB, but CFPB banks are regulated by FDIC. And so, um, there is a difference between being regulated by FDIC or the CFPB. So you haven't been impacted by all of the craziness things and people leaving and, that with the CFPB, but you shared some information related to FDIC and recent exams that you've had with them that I just love for you to share your feedback on what happened in your last exam and kind of what you're expecting to happen. With
sure.
that.
So, like a lot of banks, we struggle on the fair lending side. And the exam that we had before this, we got a perfect score, but it was like, but you need to really improve these metrics. So we worked really hard for 3 years to make it better when they came in. And then we had an FDIC exam last September, and it was the total opposite. They come in, they're like, yay, great job. Good job.
Oh,
Yeah,
wow.
so easy. But, it, we kind of mentioned this earlier. It all depends on who's in charge, right?
Yes,
Rules change depending on who's in charge.
they
So,
have changed dramatically. Yes.
right.
Yes.
So I would love for the CFPB to go away. I would love for TRID to go away, but uh, whether it does or not, it could just come back.
Well, I mean, that's very true. It's like you're not only it's like you have to plan for today, but with an outlook of 3 years away, what is going to happen? Because we've seen the shift before, and
Mm-hmm.
we should see the shift again. So, related to kind of like what you're doing then, are you kind of in that spot where you had a great last exam? Are you changing anything in your process at this point, or is it kind of a hold?
I mean, we are still, our next exam is going to be 3 to 4 years away. We don't know who's going to be in charge at that point. We don't know what the rules are going to be at that point. So we're just continuing on with the same fair lending design that we put in place and continuing to try to grow that just in case we don't want to be caught flat footed.
Of course not. Yeah, it's almost like you have to prep two different ways with your eyes on what could happen in the future. But if you're doing things and you had a successful audit the last time, obviously you were doing things the right way, but you have
Mm-hmm.
to think about what could change down the road and do we need to adapt this? But I feel like that's like every process within your business, right? It's not just
Mm-hmm.
related to audits or fair lending necessarily. You just
Right.
kind of have to try to stay on top of what is going on out in the world and adapt as necessary. I think that that's one thing that we are really good at here in the mortgage space, and people other places don't necessarily have to do that in your jobs. I feel like every aspect of mortgage changes, and it's
Oh,
part of the
all the
reason why
time.
we love it,
Yeah.
right?
Yeah.
Is
Yeah.
it
I'm very ADD. So I love things that are like, it's either mortgage or emergency medicine, whatever.
That is so funny that you say that because if I wasn't, I never planned, most people don't plan on being in the mortgage industry. And if
Yeah.
anybody on this call did plan on it and it was a very strategic thing, I want you to pop your name into the chat box because I think that almost everybody that I talked with, we kind of um, land here and
Look
didn't,
at Aaron D.
yeah.
That's so funny.
Your ER doctor brother told you that mortgage was more stressful. I would agree with that. But what's really funny about that, Joy, is if I weren't here, I would have loved to have been an emergency room doctor. That was like, I'm so interested in that medical piece of things. And I had a son that was in the ER all the time, and doctors would go, are you the mom? Because I was so calm in that environment, even though there was a lot of stuff going on with my
Right?
son. But yeah, so that is very, very funny. You have good bedside manner. Erin D, you are delightful. It's always nice to see
It's so
you
funny.
popping into our chat. So yeah, so things for you just haven't changed much in regards to that, which is kind of nice to have a period of time where you know that you're doing all the right things and you can sit back and not necessarily relax, but take it all in and continue to fine tune things and see what happens next. So yeah, we were talking earlier which I did not know this about you until today. But we were talking earlier, both of us, about kind of the environment that we grew up in mortgage and what it was because we've both been in for a while. So we both grew up in the mortgage space when it was a very male-dominated world at that point in time. That has changed quite a bit. And so we were talking about like if you had somebody coming into the mortgage space right now, like what kind of advice would you give to another woman or really anybody like coming into the industry related to their career and what you would share with them that you think would be good advice for them to do if they want to remain in the mortgage space?
I would say that, be confident. Even if you don't feel confident, act confident. It's easy as a woman to be perceived as weak, even by other women. Doesn't matter if men, women, but it's easy to be perceived as weak. And if you want to stand out and you want to, especially be a leader, like you have to be able to make strong statements. You have to be able to know your mind and what you want and be able to communicate that in a
Yeah,
forthright way.
yeah. Yeah, I would agree with that. I think that sometimes that in the environment that I was in, which granted it was a long time ago, um, kindness really was kind of almost perceived as a weakness. And
Mhm.
um, if I was anything other than I always try to be kind because I grew up that way. I grew up in rural Iowa, and that was like a requirement. It was how you grew up. You treated people appropriately. But I feel like in my early stages of my career, people saw that as a weakness, and maybe just that you didn't know as much as what other people know. And really, in the mortgage space, nobody knows everything.
No.
Literally learn something every
And
single
my
day.
first boss in mortgage was the one who taught me this. I I don't know. I was just I was very young. So I was 24 probably. And I would constantly, just like walk around like this, and she would say, she would compliment me and I'd be like, she's like, just say thank you. Just, and
Yeah.
I think that really helped.
Yeah, absolutely. So in the chat, we have grow thick skin, and remember, it's not personal, except for the borrower, at least most of them. Yes, you do have to grow thick skin. That is something. If I were to tell anybody that, I think I would probably say ask a lot of questions because nobody knows everything. You're not, I mean, we've all been in a room before where somebody says something and you have no idea what they are talking about. And I know that
Yeah.
happens.
It's so important because if you have that question, 10 other people have the same question. And they're like, oh, thank God they asked that.
Yeah, yeah,
Yeah.
and nobody's willing to speak
And
up.
no, that's the only way you're going to learn is if you ask questions.
Yeah. Yeah. So I think if you want a career in mortgage, I mean, I know that mine wasn't guided by myself. I think that's very different. I mean, I think you need to be more cognizant now than ever, probably about managing your own career versus waiting for things to happen. I think that's something that traditionally women probably do a little bit more than men is sit back and hope that somebody recognizes you instead of making the
Mm-hmm.
statement,
Right.
right? Yeah. So, I have loved talking with you. It has been a fabulous time doing this with you today. We've been trying to do this for a while, so I'm so relieved that you would hop in and chat with me a little bit today, very, very unexpectedly. We really, really do appreciate you doing this. Your insight is wonderful, and you've got fans in the chat
Yeah. Thank you guys.
sharing messages with you. So, yeah, so we will be back in a couple of weeks with the latest in mortgage today. Joy, we owe you one. So whatever you need, make sure and you let either Ash or I know. Thank you for doing this with me today. Really, really appreciate
I
you.
enjoyed it. Thank you so much.
You're welcome. And let's talk. Let's chat sometime soon.
Okay. Sounds good.
Bye.
Bye,
Bye,
guys.
everybody. Thanks for joining.